What's up, everybody? It's Jimmy, and we are in Cashflow Nest. And today I'm gonna show you all the terms that you need to know in when you're investing in a rental property. The first one, so let's put here terms. I hope you can read from there. So the first one is net income, and this will be equal to the gross income. So the income that you're actually getting every month, the gross income. For example, if it's a rental, it could be your rent. So gross income minus the expenses. The expenses actually include, for example, taxes, include all different things that you actually need to pay after getting the rent done. The second one is the monthly loan payment, which actually is just for the ones that are actually making smart investments, so actually putting just 20% of the money inside of the deal. So this is the monthly loan payment. Let's put it just monthly LP, and this will be equal to the principal. So actually the principal is the cost of the house times the interest. So you need to really to know you need to really to know you really need to know the actually that the interest must be in a decimal form and also divided into 12, so in order to the formula to work. So you have the interest, and this will be multiplying 1 plus the interest again times the period. We're just going to put period here. So what's really happening there is that you will also need to the period of years, you will need to transform it into the month in order to make it work too. So then we have the final net income, and this will be equal to, so the final net income actually it's gonna be the net income minus the monthly loan payment. So net income minus loan payment. This is actually all the terms that you actually really need to know when you are actually calculating for the rental properties. So for example, the net income is actually just the first part. Then you have this the monthly payment to the bank or to the investor, and then or the one who borrowed you the money. Then we have the final net income, which is um, the net income that you got before the monthly LP, but minus, sorry, the net income, which is the gross income minus the expenses, minus the loan payment. This will give you the final net income, meaning that it's your actually a cash flow. So then we have the total investment. You really need to know the total investment in order to have to really calculate all the numbers inside of a deal. So the total investment will be the down payment you got. So it's better if you do a down payment because you are actually just paying the 20% of the deal. So let's put down P here. It will be the down payment plus the closing costs, who every time you need to pay the closing costs in order to make the deal. Uh, Basically, I think a lot of times it happened to me is just 1% of the deal, 1-2% of the price of the house. So over the past of the years, I have been investing in a lot of properties, and I can see that it's between 1 and 3% the closing cost. So you actually need to know um, these calculations, um, and really knew what you are going to pay in order to satisfy yourself and get the best cash flow possible. So then we have the year net income. The year net income. and this will be actually just the final net income times 12, which is basically the months, right? So year net income will be the final net income. Just you to know, the final net income is already with the down payment paid every month. So for example, the year net income will be the final net income times 12. And then we have also the cash on cash return. You really need to know this in order uh, to make it really calculate really good and to analyze really the deal. So the cash on cash return, the cash on cash return will be equal to the year net income divided by the total investment. So the total investment you made. So as I said before, the total investment will be the down payment plus the closing costs. Uh, I mean, if you're paying the whole deal with your money, then of course it will be no total investment since you're paying all the deal. Well, actually, the total investment will be really big, and so the return will be smaller. So you need to be aware of that. And this you will be then you will need to multiply by 100, so you get the percentage here. So the next term you need to know is the first month interest payment. So the first month interest payment, and this will be equal to the principal times the interest divided by 12. So this will be the first month interest payment. Then we have the first month principal payment. You know that when you're making a loan, you're actually paying every month a part of interest and a part of principal. And for example, in the first month, of course, you're gonna pay more interest than the principal, but after the years pass, you're gonna be paying more and more of the principal until you pay the whole house. So so the first, let's put it, let's first year, sorry, first month principal payment, PP. So the first month principal payment will be equal to the monthly payment. So monthly payment, the monthly payment minus the first month interest payment. So FMY P, which actually we did that before here actually. So we're going almost to the end, and the other terms you need to know is the total ROI, which is return on investment of the first year, and that will be the first year principal payment plus the final net year come. Um, but that then you have the total ROI of the first year, and that's the important one. So you're gonna put here total ROI percentage, of course, of the first year and this will be equal to the total ROI first year divided by the total investment. So these are actually some of the terms. We're gonna continue now, and then we're going to go to the ones that you are analyzing a lot of properties. You will see that you're gonna be talking about cap rate, you're gonna be talking about net income, gross potential income, and the total ROI of the first year, which actually we did here. So let's divide this into four. And in the first one, I want to put the cap rate. And just you to know, the cap rate will be the net income divided by the price of the property. So the net income is actually what you are getting every month of the rentals of your tenants, and then you're gonna divide by the price of the property, and this will give you the cap rate. Normally, when you're analyzing all the properties, you are actually looking at the cap rate. So net income divided by the price of the property, right? Then we have the net income, which is important to know, and this will be the cap rate. This will be the cap rate times the price of the property. So, um, yeah, so cap rate will be the net income divided by the price, and then, for example, if you wanna know the net income, you just sweep the formula or transfer the price up to the other side, and this will give you actually the net income, the value you need. So then we have the gross potential income, which is really, really important in real estate investing. So gross potential income, and this will be the number of units you have times the annual rent. This is, for example, just for a multifamily, or when you're talking about duplex, triplex, and so on, condominium, etc. So actually, I have been investing just in single family homes and also in multifamily homes, and has been great. But as I can tell you, I needed to learn all this information the before actually putting up into a deal. So, for example, the gross potential income will be the number of units, number of units times the annual rent. So these are the terms that you are actually going to really need to know in order to put up a deal, really know in what you're investing on. So in the next videos, I will be putting examples of how to apply all these terms, and of course, but in the first video, I wanted to tell you actually which terms are going to be, and of course, these will actually help you to calculate all you need into your next investing deal. I do this in every single deal I have in each year. For example, each year I have been investing one property. I have now 24 properties, and actually it has been going great. Um, of course, I need to learn all these numbers, but actually it's easy, and if you put into a practice, you practice every day, it will work again. So I hope this have helped you a lot. If you have questions or something, please put it on the comments below. Subscribe. I will be putting examples of single and multifamily homes investing deals, and all the calculations you need to know when you're analyzing one. So yeah, so thanks a lot. I hope this have helped you a lot, and see you on the next one.